Look at your last paycheck. Really look at it. Before you ever touch that money, the government already took a huge bite. 20, 30, sometimes 40%, just gone. You worked every hour of it and you never even saw a third of it. Now here is the part that should make your jaw drop. Some of the richest people on earth, worth billions, pay a tax rate close to zero. Not by cheating, not by hiding in some island vault. Completely, boringly, legally. In some years, a billionaire can pay a smaller percentage in tax than the nurse who takes care of them. And when this leaked a few years ago, everyone was furious. But almost nobody understood how. Because the rich are not breaking the rules. They are playing a completely different game than you are. A game with rules that were quietly written in their favor a long time ago. Today we break down exactly how the ultra-rich pay almost nothing in tax, step by step, drawn simply. And by the end, you will see money in a way you can never unsee. Let's get into it. Everything starts with one word that changes everything. Income. Here is the trick. And it is the whole trick. The government taxes income. It barely taxes wealth. So what is the difference? This is the key to the entire video. Income is money that comes in. Your salary, your wages, the paycheck you get for showing up. That gets taxed hard, immediately. Wealth is what you own. Stocks, companies, real estate, art, things that go up in value while you just hold them. And here's the magic. When something you own goes up in value, you do not pay a penny of tax on it. Not until you actually sell it. As long as you just hold it, that growth is invisible to the taxman. So picture a billionaire. He does not really have a salary. He does not have income the way you do. He owns a giant pile of stock in his company, and every year that stock might grow by billions. On paper, he got billions richer, but he did not sell anything. So according to the tax system, he made $0 and you cannot tax zero. That is step one. The rich hold their wealth in things that grow without being taxed. But it gets cleverer. Now you might be thinking, okay, but he has to sell eventually, right? He needs actual cash to buy the mansion, the jet, the yacht, and the second he sells that stock, boom, he gets taxed. And you would be right. Selling is the mistake. Selling is what triggers the tax. So the rich made themselves a simple rule: never sell. But that creates a funny problem. If all your wealth is locked up in stock you refuse to sell, how do you actually buy anything? How do you live? You are a billionaire on paper, but with no cash in your pocket. This is the exact problem the ultra-rich had to solve, and the solution they found is genuinely brilliant. It is the move at the center of the whole thing, and once you see it, you will spot it everywhere. The whole system has a name: buy, borrow, die. It sounds strange, but stay with me, because this is the machine. Step 1. Buy. The rich buy assets, stocks, companies, real estate, things that grow, and they hold them forever. Step 2, and this is the genius part: borrow. Instead of selling their stock and paying tax, they go to a bank and borrow money against it. Think about that. The billionaire owns $100 million of stock. He does not sell it. He walks into a bank and says, "Lend me $10 million and I will use my stock as backup." The bank happily says yes, because he is rich and safe. And here's the beautiful part. A loan is not income. When you borrow money, you have to pay it back, so the government does not tax it at all. So the billionaire now has $10 million in cash to spend, and he paid zero tax to get it. His stock never sold. His wealth kept growing, and he is living on borrowed money, tax-free. He spends it on the mansion, the jet, whatever he wants. Then when he needs more, he just borrows again. And the interest on those loans? It is tiny compared to how fast his assets are growing, so he never really feels it. Now for the final step, the darkest and cleverest one: die. When the billionaire eventually dies, his heirs inherit all that stock. And thanks to a rule called the step-up, all those years of growth that were never taxed get completely wiped clean. The slate resets. The gains vanish as if they never happened. The loans get paid off from the estate, and the family keeps the mountain of wealth. Buy, borrow, die. An entire fortune passed down having paid almost no tax the whole way through. And that is just the main engine. Around it are dozens of smaller tricks. Take the business write-off. When you own companies, a huge amount of your life can become a business expense. The private jet, a business tool to fly to meetings, write it off. The fancy dinners, the travel, the cars, the office that looks like a palace, business expenses, lowering the tax bill even more. Then there are the losses. If one investment loses money, they can use that loss to cancel out taxes on the ones that win. And the charitable foundation. Give a huge chunk to your own foundation. Get a giant tax deduction, while still controlling how that money gets spent and who it influences. Each trick alone saves a little. Stacked together on top of buy, borrow, die. They turn a multi-billion-dollar fortune into a tax bill smaller than a middle-class family's. None of it is illegal. That is the part that drives people crazy. Let's make this real with two people standing side by side. Meet a nurse. She earns $100,000 a year, a great salary. The government sees that income the second she earns it and takes roughly $30,000 in tax. She never even touches it. Now meet a billionaire. On paper, his fortune grew by $100 million this year, but he did not sell a thing. So his official income? Close to zero. His tax bill? Close to zero. He needed some spending money, so he borrowed $5 million against his stock. A loan, not taxed. So in the very same year, the nurse paid $30,000 in tax on $100,000 earned, and the billionaire paid almost nothing while getting $100 million richer with millions in cash to spend. That is not a crime in the shadows. That is just the two different rule books working in broad daylight. And there is one more asset that plays this game even better than stocks: real estate. Here's the wild part. When you own a building, the tax system lets you pretend it is losing value every year. It is called depreciation. On paper, your building is slowly wearing out, so you get to claim a loss on your taxes. But in the real world, that same building is going up in value and paying you rent every single month. So a landlord can be getting richer and collecting rent while legally telling the tax man he lost money. It is a paper loss on top of a real gain, and the rich stack buildings like this to erase their tax bills entirely. This is why so many fortunes flow into real estate. It grows, it pays you, and on paper, it pretends to bleed. There is even a special trick for the men who run big investment funds called carried interest. It lets them take a giant slice of the profits they make with other people's money and have it taxed at the low rate meant for investments instead of the high rate meant for a paycheck. A different name, a different rate for what is really just their pay. The loopholes go all the way down. So the obvious question, why on earth is this allowed? The answer is uncomfortable but simple. People who make the rules are the same people who benefit from them. The tax system was built to tax income because when it was designed, most wealth came from working. But the ultra-rich do not make their money from working. They make it from owning. And the system barely touches owning, so they slip right through the gaps legally. Every few years, someone tries to close these loopholes, and every few years, it quietly fails. Because there is an army of lobbyists, lawyers, and accountants whose entire job is to keep this game running. So it stays. The worker pays tax on every dollar the moment it is earned, and the owner borrows against a growing fortune and passes it down almost untouched. Two completely different rule books in the same country. Now, you probably cannot borrow $10 million against a stock portfolio tomorrow. But the lesson underneath this is the most important money idea there is. The rich are not taxed less because they earn more. They are taxed less because they own instead of earn. Income gets taxed. Ownership gets rewarded. That is the whole secret. So the takeaway is not to feel angry. It is to slowly move to the other side of the table. Stop being only someone who earns a paycheck. Start being someone who owns things that grow, even small things. A share of a company, a slice of a fund, an asset that works while you sleep. You will never fully escape the tax man on your salary, but every dollar you turn into ownership plays by the friendlier set of rules, the rich person's rules. If you want to see how the money machine behind everyday life really works, subscribe. We break it all down, drawn simply. I will see you in the next one.